Hi everyone, it's your daily 10-minute business and finance news wrap for this Wednesday, the 17th of August. Let's go straight into some news which dropped after the markets closed, and that's from BHP. It has been a major beneficiary of the global economic recovery, especially as China demands more of its iron ore, and we saw it in its results this evening. Full year net profit of $11.3 billion US dollars, that's up 42%, and it will reward shareholders with a record final dividend of $2 per share. But there were some other major developments which BHP announced today also. It's ending its dual listing structure, which was created back in 2001 when Australia's BHP merged with Britain's Billiton. And that means its primary listing will now be on the ASX. And the big one, it's confirmed that it has agreed to merge its $20 billion oil and gas business with Woodside, creating a global top 10 energy giant. BHP shareholders will own 48% of Woodside. And finally, it's swapping oil and gas for potash. It's a mineral which helps to enrich fertilisers, with a $5.7 billion investment in a Canadian project. Its CEO, Mike Henry, spoke earlier in a media conference. Here's some of what he had to say.
BHP's products are essential to global economic growth and decarbonisation. The world's going to need more copper and nickel for renewable power and electric vehicles, iron ore and high-quality metallurgical coal to produce steel for infrastructure, and that includes the infrastructure for decarbonisation, and potash for sustainable global food production. We're actively positioning BHP to meet those needs and to continue to sustainably deliver value for our shareholders, employees, customers, community and government partners.
That's Mike Henry there, the CEO of BHP. That news really coming to the market only after it closed, so we'll have more details on that in tomorrow's edition of SBS On The Money podcast. To the Australian share market now, which had its worst day in about 2 weeks. The S&P ASX 200 down 0.9% to 7,511. One of the reasons was because one of our major banks went ex-dividend. For more, I spoke earlier with Stephen Daghlian from CommSec. Stephen, the market's having one of its worst days in quite some time. Why?
I think perhaps there's a bit of caution re-entering the market, of course, with the Delta variant still a concern and all the lockdowns we've got around as well. But today was an interesting day because Commonwealth Bank went ex-dividend. And of course, it's the largest company on the market, $2 per share dividend that will be paid out to shareholders who are eligible in late September. That's about twice what it paid out a year earlier. So it was a major weight. Mining companies as well certainly weighed on our market. We've had a recent trend, of course, where iron ore prices have taken a little bit of a hit from the record highs that we hit just a couple of months ago. But one thing that is important to keep in mind here is where the market has come from. I mean, last week we saw the market rise 1.2%. We had a number of record highs last week. And in fact, over the past 12 days, Ricardo, we've had 8 record highs for the Aussie share market. So under the circumstances, it certainly has been quite a robust period for our market. And we're halfway through an 11th consecutive month of gains.
How are consumers feeling about the lockdowns at the moment?
Well, the lockdowns are certainly pushing around consumer confidence quite a bit. So over the past week, we've actually seen from a survey today showing that consumer confidence has actually jumped back by around 2.5%. So quite a big jump. But keep in mind that a week ago, we had consumer confidence falling by more than 3% to the lowest levels in about 9.5 months. So we're continuing to see this volatility. Something that is also important here is that things are changing so quickly on the lockdown front that it's difficult to get a real clear sense of how consumers are feeling today, because this particular survey doesn't take into account the more stringent, the stricter lockdowns, the widespread lockdowns that have come through in just the last 24 to 48 hours. So under the circumstances, still certainly a very resilient consumer, but even though confidence levels have jumped up 2.5%, there's a very long way to go and plenty of uncertainty ahead.
Profit reporting rolls on. We'll hear from BHP after the markets close, but any others of interest to you?
Well, we've entered obviously the period which is the busiest fortnight of the year for the number of companies releasing their full year profit results. We heard from a number of companies today. One of them was Santos, which was down for most of the session. That maybe was more of a reflection of the oil price, which has fallen for 3 consecutive days. That's been a weight on that whole sector. But we did see revenues jumping about 20%, back to profitability for the group as well. The dividend of 5.5 cents US per share, more than double what it paid out a year earlier. And it also maintained its guidance confidence when it comes to both sales volume and also production guidance. We also heard from Domain Group, which was up for most of the afternoon at least, but did get off to a bit of a rough start. Obviously, this is a company that really has received a bit of a boost from the strength in the property market, which continues to be robust despite the lockdowns which are taking place. So net profit for Domain up around 66% for the year, revenues up close to 10%. The final dividend, also 4 cents, was the first dividend that it actually paid out since it will pay out since February last year. And finally, Breville Group, the retailer of small appliances, including kitchen appliances. This is a company that also released its results, and obviously it's been the beneficiary of this work from home trend with a double-digit growth across all of its markets, and that includes Asia Pacific, it includes Europe, it includes the Americas, which is actually its biggest earner, but still is facing some supply chain issues because of the border closures and lockdowns. That's keeping costs elevated, and the dividend, as expected, was a bit lower than what it paid out a year earlier as well.
And the Reserve Bank Board meeting minutes out today. Anything of interest?
Well, look, there was nothing groundbreaking in the Reserve Bank Board minutes, as was expected by most economists. It was a very important meeting, of course, in early August, but the RBA governor's already had an opportunity to deliver a speech since then, so there was nothing really new here. The last couple of months have been interesting because there was an expectation that in this August meeting, the RBA might perhaps just reverse or push back some of its plans to start paring back or reducing its bond buying program from September. It wasn't the case. The RBA still seems quite optimistic that once things reopen in the tail end of this year, hopefully, we're going to see quite a quick rebound from the economy. Every economist is essentially thinking there's going to be a big hit to the economy, of course, over the September quarter of around that 2.7% decline. The question, though, and the uncertainty here is when we're going to see the reopening of the economy. There is always the chance, of course, that if there are any issues coming up with the vaccination program, and also, of course, if we keep getting these elevated cases across a number of states, it could take easily longer to see the reopening of the economy, and that could certainly see an issue in the December quarter for our economy as well.
Stephen Daghlian there from CommSec.
This On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It's not personal advice and it doesn't consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.